Gold soars past $4,300 an ounce, poised for its most impressive week in half a decade. What's fueling this precious metal frenzy? Imagine a world where economic uncertainty turns investors into treasure hunters, and gold emerges as the ultimate safe harbor. That's exactly what's unfolding right now, as gold prices shoot beyond $4,300 per ounce, marking a thrilling high and gearing up for its strongest weekly performance since March 2020. This surge isn't random. It's driven by a mix of factors that have investors scrambling for the yellow metal as a hedge against instability. To break it down simply, safe haven assets like gold are those that tend to hold or increase in value during times of turmoil, much like how people might stock up on essentials during a storm. In this case, signs of fragility in U.S. regional banks, escalating global trade disputes, and growing anticipation of additional interest rate reductions by the Federal Reserve are all pushing traders toward gold. It's a classic move. When traditional investments feel shaky, people flock to something perceived as reliable. As of the latest data, around 0233 GMT, spot gold prices climbed 0.3%, to stand at $4,336.18 per ounce, having touched a new peak of $4,378.69 earlier in the session. Meanwhile, U.S. gold futures for December delivery surged 1% to $4,348.70. This momentum has propelled the metal's value up by roughly 8% over the course of the week, setting the stage for what could be its most robust performance since the onset of the COVID-19 pandemic. And this isn't just a one-off spike. Gold has hit record highs in every trading session this week. But here's where it gets controversial. While gold is dazzling, not everyone agrees it's a foolproof investment. Some argue that betting on rate cuts and geopolitical drama could be overplaying the hand, especially if those issues resolve sooner than expected. Is gold truly a timeless shield, or might this rally be fueled by short-term hype? We'll dive deeper into that tension later. Silver, another precious metal often linked to gold's movements, saw a slight dip of 0.7% to $53.86 per ounce on the day, yet it's still on pace for a weekly increase. Earlier, it even smashed its own record at 54.35. Largely mirroring gold's enthusiastic climb and benefiting from a sudden scramble in the spot market. Think of it as a buying frenzy that drove prices up quickly. Analysts are buzzing about the potential for even greater heights. Tim Waterer, chief market analyst at KCM Trade, noted that $4,500 per ounce might not be far off, but much hinges on how prolonged worries about U.S.-China relations and any potential government shutdown affect the markets. It's a reminder that gold's trajectory can be highly sensitive to these external pressures. Speaking of trade tensions, China has ramped up its rhetoric, accusing the U.S. of stirring unnecessary alarm over rare earth export restrictions while firmly rejecting demands to lift them. These rare earth minerals are crucial for everything from smartphones to electric vehicles, so any curbs can ripple through global supply chains, adding another layer of uncertainty that boosts gold's appeal as a store of value. On the domestic front, Federal Reserve Governor Christopher Waller has publicly backed another interest rate cut, citing concerns in the labor market. This aligns with market predictions for a quarter point or 25 basis points, essentially 0.25% in simple terms, reduction at the Fed's upcoming meeting from October 29th through 30th, followed possibly by another in December. For beginners, these cuts lower borrowing costs, making non-interest-bearing assets like gold more attractive compared to interest-earning investments. Elsewhere, Wall Street wrapped up Thursday on a downbeat note, with jitters over regional bank vulnerabilities rattling investors already anxious about U.S.-China trade clashes. Waterer pinpointed this as it has skyrocketed over 65% so far this year, fueled by a cocktail of geopolitical strife, bold bets on rate reductions, increased purchases by central banks, a trend toward reducing reliance on the U.S. dollar, de-dollarization, and strong inflows into gold-backed exchange-traded funds, ETFs. To put it in perspective, picture ETFs as investment funds traded like stocks that give you exposure to gold without physically owning it. They've been a big driver of this demand. And this is the part most people miss. On the geopolitical stage, U.S. President Donald Trump and Russian President Vladimir Putin recently committed to another summit aimed at addressing the Ukraine conflict. Meanwhile, Western allies are intensifying pressure on Russia, with Britain slapping sanctions on key Russian oil companies. These developments underscore how global events can swing gold prices, as investors weigh the risks of broader instability. While gold and silver steal the spotlight, other metals are feeling the heat too, though differently. Platinum dropped 0.7% to $1,701 per ounce, and palladium fell 0.4% to $1,607.93. Yet both are still trending toward weekly advances. This divergence highlights how market dynamics can vary across commodities, often tied to industrial demand versus pure safety plays. In wrapping this up, gold's current trajectory raises some provocative questions. Do you believe this rally signals a lasting shift toward gold as the go-to asset in turbulent times? Or is it a temporary spike that could fizzle if economic winds change? And here's a controversial angle. Could the hype around rate cuts and trade wars be exaggerated, potentially leading to a painful correction for over-eager investors? What are your predictions? Agree? Disagree? Or have a different take? Let's discuss in the comments. Your insights could spark some lively debate.